This month, we're in Columbus, Ohio at the world headquarters of Nationwide Financial Group, one of the leading providers of variable universal life, which of course is a retail version of private placement life insurance. Now, when we have customers that are interested in private placement, we usually tell them we expect you would have an investable net worth of at least $50 million and be able to commit a minimum of $10 million to a private placement contract. Now, we have a lot of people that don't meet those criteria, and previously we might not have thought of pushing them toward a VUL solution, but today, a variable universal life looks a lot different than it did 25 years ago. What we're seeing now in the VUL life that's on the market is really competitive pricing. In fact, depending on the scenario of how you pay premiums and the expense loads of the products, it could very well be that you could actually pay less for a retail VUL product than you would a private placement life insurance product. Now, let's talk about who would be an appropriate client for VUL. Now, this is someone that's willing to put aside money annually or at least quarterly of a sum, at least our clients, of $100,000 a year, that are willing to be able to accept the investment choices on the carrier's platform. So for instance, a carrier might have over 100 different types of insurance dedicated funds that a client can choose from. Now, where they want to choose private placement is obviously if they have at least $10 million to commit to the product and they're interested in bringing their own custodian, their own investment manager, and having that investment manager choose from bespoke products that aren't available necessarily on a carrier's platform. Now remember, at Life Insurance Strategies Group, we don't sell products. We help our clients, both individual and institutional, make decisions about complex life insurance transactions. If we can help you, reach out to us at lifeinsurancestrategiesgroup.com.